case study, it is related to asset liability management. First case study over here, it is related to asset liability management. It says Bank ABC has following assets and liabilities in its balance sheet as on 31st March 2021. So the different assets and liabilities are given over here, like capital, reserves, current account deposits, savings bank account deposits, term deposits, borrowings, and all the other assets and liabilities are given. And further it is given that total assets is equal to total liabilities and is equal to 4 lakh crore. And it is equal to 4 lakh crore. And further it is said over there that the term loans have fixed rate of interest. It is mentioned over there that the term loans are having the fixed rate of interest. So we need to tell in the very first question, we need to answer that what is the amount of interest rate sensitive assets. So we need to calculate over here what is the amount of interest rate sensitive assets in this particular case. So first step that we'll be doing, that will be bifurcating these between segregating the data between the assets and the liabilities. So capital, kindly please do let me know at the earliest. So if we form a table over here related to the assets and liabilities, what would be related to that? How we can basically solve the question over here? So let me first of all draw a table over here where we will be calculating we will be having the liabilities. So over here we are having the liabilities on the one side and further we are having assets on the other side. Okay, so first of all, first component, jaldi se jaldi you have to answer at the earliest. Capital belongs to what component? Capital is liability or assets? It is liability. It is a liability and it is given to be 4,000 crores over here. And further the reserves is also part of liability. And if we look at the current account deposits part, current account deposit, that is also what? That is also a liability. The current account deposits are also a liability. So whatsoever deposits you are having in the bank on your balance sheet, it will be on liability side. It will be your liability because you have an obligation so as to repay the deposits to the public itself. So it's your liability. So whether it is the current account deposits or it's a saving fund account deposits, both are liabilities. So we'll be writing it over here. Current account deposits and saving fund account deposits, both are liabilities. And further, if you are having the term deposits, we are having the term deposits, that is also a liability, that is related to term deposit. Then balances with the other banks. So whatsoever balances that you are maintaining with the other banks, that basically that's a liability or asset. With regard of this particular part over here, that is balances with other banks, it is related to assets or liability. Kindly please do confirm at the earliest. Kindly please do confirm at the earliest. So we are having 1,20,000 over here and 1,20,000 crore over here in saving fund deposits. And in case of a term deposits, we are having it is equal to 1,20,000 again. Okay, so it basically belongs to what component over here? Balances with other banks is related to an asset. It is related to an asset. So when you are maintaining the balances with the other banks, what does it mean? That they have the obligation. So if I'm maintaining a balance with the bank ABC over here, in that particular case, I'll be saying they are having an obligation so as to pay back me those deposits. So it is my asset. It is my asset. So very right said. Priyanka Tejawat has answered at the earliest that these belong to the asset. So we will just writing it over here, bank balances. And the other component that it is related to investments in securities or the cash balances. Cash balances are basically what? Cash balances are also your asset. Cash is also your asset. And other than that, investments, if you are having many investments, those are also your assets. Then further, bills payable. Bills payable basically are those bills over here which have been discounted already. So those will be basically related to your assets over here. And further it is related to the cash credit component, that is the CC part of it, that is also asset. And further the term deposits, and then it is a fixed assets. Okay, so all are the assets over here. So let me write the components related to them against them. So bank deposits are basically we are having 60,000 crores. So it is a 60,000 crore amount. In cash, we are having 27,600. Investments are amounting rupees 60,000 again. Investment in securities is 60,000 again. Bills payable is 80,000 crores. And further CC component is related to 80,000 again. And then the term deposit, it is 80,000 again. And further fixed assets, it is 12,400. Okay, so we are now to take a total of both these sides. So 4,000 plus 24,000. That will be equal to 28,000, and further we need to calculate the, we need to find the total, we need to calculate the total over here. Okay, so we let me check if we have written write the right figures over here or not. So 4,000 and further 24,000 and further 24,000, then it is 1,20,000, 1,20,000, 1,20,000, and then it is a case related to what? It is a bank borrowing from Reserve Bank of India. We basically left that particular part, so we will be writing it over here. So it is a balances with the Reserve Bank of India. So whatsoever the balances you have maintained over there, so whatsoever the borrowings, not is balances, it is related to borrowings. Okay, so borrowings over here, it is basically related to what? It is related to your liability part. So whatsoever amount you have borrowed, that is given over here to be 12,000 crore. So if we take a total of these, so it will be 4,000 plus 24,000 is equal to 28,000, and further 12,000 from Reserve Bank of India, it is 40,000, and 3,60,000, so it is 4 lakh crore. So it is 4 lakh crore given in the question itself. We just cross-checked it. Okay, then further it is related to bank deposits you are having, bank balances with the other banks, and that is 60,000 plus so we'll take a total over here. So 60,000 plus 27600 plus investments that you are having 60,000, and further for the bills payable 80,000, and then it is 80,000 again, that is 1,60,000, and then it is a last one, that is a fixed assets, that is 12,400. That makes it 4 lakh crores. Now the question is asked from the number of candidates related that why bills payable are, how these are the assets. So these are those bills which have been discounted. That is why we have taken it as a asset over here. Okay, so these are basically related to those bills which have been discounted by the bank. Okay, so these will be taken on the asset side. Otherwise, if we look at the bills payable, it's a liability na, but in the books of the bank, if basically it's not a bill that is drawn on the bank, it relates to the bills those have been discounted by the bank. Okay, so these are basically the assets and liabilities. Now what was the first question? That was related to what is the amount of the risk sensitive assets. So risk sensitive assets, that is RSA. These are those assets, if there is interest rate fluctuation in the market, if there is interest rate volatility, then these assets will be get affected. So first of all, we have to look at the what side? We have to look at the assets sides over here. Okay, because we need to tell what is the amount of interest rate sensitive assets over here. So just look at the factor that bank deposits, basically the bank must be paying you interest rate, and further if there is change, that will be affected by the interest rate. So this is risk sensitive asset. Okay, and further, is cash a risk sensitive asset? Kindly please let me know. Kindly please do answer at the earliest. Is cash a risk sensitive asset? Is it affected by the change of interest rate? Yes or no? Kindly please do answer at the earliest. Is cash a risk sensitive asset? Yes or no? Third component, it is related to investment. So whatsoever investments you are having, it may be related to the capital market, it may be related to the securities market. Okay, so in that particular case, it is get affected by the interest rate volatility. So yes, it is a risk sensitive assets. And other cases, if it is bills payable, if you have discounted the bill, in that case it's a particular part that you have lent to someone. Okay, so in that case also it is affected by the interest rate change. And definitely CC part is also what? That is a cash credit that you have basically advanced or extended to the parties. In that case, if there is interest rate change, that will also be affected. That is also risk sensitive asset. So mostly all of them answered that cash is non-risk sensitive asset. Yes, definitely it's not risk sensitive, because it's a cash in hand. It relates to what? It relates to cash in hand. It will remain the same whatsoever the interest rate is there in the market itself. Okay, so term deposit that is given to be 80,000 part. Term deposit that is given to be 80,000 part. Is it over here? Is it basically relatedly it is having the it is clearly mentioned in the question itself that the term loans have fixed rate of interest. That the term loans are having the fixed rate of interest. So if your term loans are having the fixed rate of interest, will there be any impact related to the interest rate change in the market? There will be no impact. there will be no impact, so it will not be covered. And also if we look at the fixed assets, if also we looked at the fixed assets over here, the interest rate does not impact the fixed assets. Okay, so the only assets which are risk sensitive assets will be the bank deposits, that is the 60,000 component, that is a 60,000 component, plus the investments, that is again 60,000 component. Then it is a bills payable, that is a 80,000 component, and again the CC limit, that is a 80,000 component. So it is 1,60,000, that is 80 plus 80 is 160, plus 60 is equal to 220, and 60, that is equal to 280. So it will be equal to 2,80,000 crores. So 2,80,000 crore of the assets are the risk sensitive assets. So I'm writing it over here. So risk sensitive assets are 2,80,000 crores. So we will just writing it 280k over here. Is that clear? Okay, so that is related to the first question. I hope that this particular part is clear. I hope that this particular part is clear, that the total amount of the assets which is affected by the interest rate is 2,80,000 crore. Okay, next question goes like the question number 2 over here. It is related with the what is the amount of the interest rate sensitive liabilities. So over here we need to find out the total number of assets, which total number of liabilities which are basically affected by the rate of interest. Okay, so we are basically to calculate RSL. We are to calculate RSL, that is risk sensitive liabilities. Okay, so risk sensitive liabilities would be those liabilities if the interest rate volatility or interest rate change is there, the value of these liabilities will be altered. Value of these liabilities will be altered. Okay, now the risk sensitive liabilities is capital risk sensitive, is a risk sensitive liability. Capital, is capital a risk sensitive liability? Kindly please do answer at the earliest. Kindly please do answer at the earliest. In case of current account also, we paid no interest is paid. In case of current account deposits, no interest is paid. So it is also not what? It is also not risk sensitive asset. In the case of saving fund, the interest rate is paid. It is what? It is what? It is risk sensitive liability, not asset. It is risk sensitive liability. And the term deposits, in the case of the term deposits, these are also what? These are also are the term deposits risk sensitive? Yes or no? Are the term deposits? I'm writing 2 over here. You need to answer writing 2, because otherwise it will be I'll be getting confused related to that you have answered related to capital or what else. Okay, so first of all, let me tell you related to capital and the reserves. Capital and reserves are not risk sensitive. These are not risk sensitive. Okay, so these are also not what? These are also not risk sensitive. Now you need to answer me writing number 2 over here, that is term deposit risk sensitive? Yes or no? Is term deposit risk sensitive? Yes or no? And also Reserve Bank of India, the balances, the borrowings from the Reserve Bank of India, is it risk sensitive? Yes, it is risk sensitive. Related to the term deposit, yes, it is risk sensitive. It is a risk sensitive over here. It is risk sensitive over here. If the repricing is there, in that case it is risk sensitive. In that case it is risk sensitive. Is that clear? Okay, so the term deposit would be risk sensitive over here. So we are having the different components which are risk sensitive, that is saving fund deposit, term deposit, and the borrowings from the Reserve Bank of India, and the borrowings from the Reserve Bank of India. So these are risk sensitive liabilities over here in this particular case. Is that clear? Is that clear over here? So it is 1,20,000, 1,20,000 and 12,000, that it is 2,52,000 crores. So what is the risk sensitive liabilities amount? What is the RSL amount? It is 2,52,000 crores. Is that clear? So that would be related to the question number 2. Now we need to answer the question number 3. Let us have a look at it, what it is. So question number 3 over here, it says, in this case, how much and what type of gap is there in interest rate sensitive assets and interest sensitive liabilities? In interest sensitive assets and interest sensitive liabilities, what type and how much gap is there? So the gap is, we are quite clear with, we are having gap of amount rupees 28,000. 28,000 crores is the gap between the RSA and RSL, and RSA is exceeding RSL. This is exceeding RSL over here. So RSA is greater than RSL. RSA is a 2,80,000 and RSL is a 2,52,000. The gap is 28,000 crores. The gap is amounting rupees to 28,000 crores. And what type of gap this is? Is this a positive gap or a negative gap? Is this a positive gap or a negative gap? We need to answer that what is the amount of the gap, and further we need to answer that what type of gap it is. It is a positive gap or a negative gap. So the right answer over here has been given by the Bharani Vasuki. Bharani Vasuki over here has given the right answer, first of all, that it's a positive gap. So whensoever your risk sensitive assets do exceed the risk sensitive liabilities, in that case it's a positive gap. If the risk sensitive liabilities means if the payments are going to be more than that of the receipts, in that case it's a negative gap. But where the receipts, because our assets are, it is basically related to those amount that you will be receiving, over the time horizon. Okay, so in that case it's a positive gap over here. So as per the question and as per the data given over here, it's a positive gap of 28,000 crores. Okay, that is related to question number 3 over here. So it's a positive gap over here in this particular case. So the gap is positive and further it is amounting 28,000 crores. Is that clear? Now let's have a look at the question number 4 over here, which it says, what is the amount of tier 1 capital of the bank? What is the tier 1 capital of the bank? Now in this particular case, we are not provided with much of the data, but we need to calculate and we need to tell what is the tier 1 capital of the bank over here. We have already gone through the different components of the tier 1 under the risk management component module B, and further we know what are the different components over there. And as per the data which is provided to us in the question, we need to answer related to what? We need to answer related to the tier 1 capital. We need to answer related to tier 1 capital. So tier 1 is basically related to what? It is a going concern capital. And it is said to be core capital. So we need to answer over here, what is the amount of the tier 1 capital in this particular case? So if you remember, the different components of the tier 1 capital were comprising of the paid up capital and reserves. They were comprising of paid up capital and reserves. So the capital is worth 4,000 crore over here and reserves are amounting 24,000 crores. So the tier 1 capital over here in this particular case, it is 28,000 crores. So it will be 28,000 crores. So it is a sum total of capital and reserves in this particular case. So it will be 28,000 crores as per the question data given. Is that clear? Okay, so our answer will be 28,000 crores. So again, Bharani Vasuki has given the right concept related to it. So I'll be considering the right answer from Bharani Vasuki first of all. Okay.